Here's the Elliott wave forecast for December 15th, 2011 on the S&P 3-month chart. It's starting to look a little hairy now. It's just the past 10 days have been pretty sideways to down. And finally, after going sideways for a long time, just the market decided it wanted to go down. So right now, 0.618 support for S&P is 1198. If that can't hold, and then they would set up a test of 1158 to the downside. So best case scenario is that this is a wave 2, which would hold 1198 and then rally back over 1265 to set up a number 3. Worst case scenario that this is a downward C, or this is wave 1, wave 2, and this is wave 3, which means that 1155 would break and set up a test of 1078 to the downside. For the Dow, it doesn't look as bad as S&P, but 0.678 support is 11,600. Needs to hold that level and then rally back over 12,275 to set up a number 3, or 12,250 approximately. Set up a number 3. Worst case scenario is that we drop below 11,600 and set up a test of 11,200, which would mean we could break or test 10,400 to the downside. That's the worst case scenario. For Nasdaq, this is the worst looking chart by far. 0.618 support barely held at 2520. So if we break below 2520 in the coming days, that'll set up a retest of 2440, or the bottom of the A wave. It'll be A, B, and the C if we break below 2440. If we break below 2440, that'll set up a break of or test of 22 or 2300 to the downside. So basically, Nasdaq looks the worst, and S&P and Dow are right on the verge of breaking 0.618. So S&P needs to hold 1200 or 1198, and Dow needs to hold 11,400, I believe, 11,600. If you can't hold those levels, it would set up a downward C into the end of the year, which is not what we expected or wanted, because this is setting up for an upper 3, and best case scenario actually for Dow is a triangle here that holds 11,600 and holds 11,600 and rises back over 12,250. So we need to hold those levels, or else it could set up a C wave into the end of the year. It's a wrap.